Today, Bitcoin rises back above $43,000. The SEC, BlackRock, and the Nasdaq meet once again to hammer out just how a spot Bitcoin ETF would work, and PitchBook's Robert Lay gives his outlook for crypto venture capital investments in 2024. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Cryptocurrencies moving higher this morning. Bitcoin jumped more than 3% by noon Eastern, now trading back above $43,000. Ether also climbing, it's back above $2,200. Polygon's Matic token also got in on this morning's gains, rising to 78 cents. Okay, let's talk about the top stories. Coinbase CEO Brian Armstrong has been a strong advocate for crypto in Washington this year, and he's pushing to move the needle on crypto regulation even more next year. He spoke to CNBC's Tech Check on Tuesday and explained why he donated to a group of crypto-focused political action committees that are heading into the new year with more than $78 million ready to deploy.
The goal of that PAC is to elect pro-crypto and pro-innovation candidates in 2024. And there's 52 million Americans out there who have used crypto now. That's 5 times the number that have a union card. It's 3 times the number that have used an electric vehicle. And so this is a massive constituency, and they don't feel like their voices are being heard in DC. So I think it's time to make sure that people know that being anti-crypto is just bad politics in DC.
Now, Armstrong has warned that he thinks crypto talent could leave the U.S. if regulators get crypto rules wrong. Next, the SEC just met with BlackRock and the Nasdaq again over the asset manager's filing for a spot Bitcoin ETF. In a memo published yesterday, the SEC said it met to discuss how the proposed ETF would trade on the Nasdaq under the exchange's commodity rules. Late last month, memos revealed that the SEC also met with other asset managers, including Grayscale, ahead of the much-anticipated decision. The SEC also met with BlackRock last month and presented the agency with back-end details of how the proposed ETF could work. Last, Epic Games is bringing back blockchain-based games to its marketplace. The Epic Games Store announced that Gods Unchained and Striker Manager 3, which are play-to-earn blockchain games, have returned to the marketplace after Epic updated its policies. Normally, Epic doesn't allow games rated as adults only, but the gaming giant told us that some blockchain games were rated adults only because they were blockchain games. Going forward, Epic said the store policy will allow games rated adults only solely due to the usage of blockchain and NFT technology. All right, for our main story, we take a look back at venture capital funding in crypto this past year. Investments in digital asset startups have continued to drop in the third quarter, according to PitchBook's latest crypto report. So I spoke with the research firm's crypto analyst, Robert Lay, about what factors are behind the downward trend and what we can expect in 2024. PitchBook released its Q3 crypto report last month, revealing that venture capital interest in crypto declined in the quarter, with a 28% drop in funding and a nearly 25% decrease in deal count, the lowest level since late 2020. The report's findings highlight that VC funding for crypto startups remains challenging after a rocky year. So what is contributing to that sentiment?
Yeah, so this has been the ongoing theme for the year, is that investors have pulled away from investing in the crypto space. Generalist investors have moved to other areas like AI and health tech and climate. But we still see the native crypto investors really stayed in the space, and they're still doubling down in the space. The only thing is that the pace of investing has slowed down. So they're not investing at a higher clip that they did in 2021 and early 2022. But I want to caveat that a little bit, is that there's a little bit of a lag in the data. So we see a low in the data, but anecdotally, and our conversations with founders and investors is that deals are picking back up. So founders are having an easier time meeting with investors and finding investors to come and speak with them and look at their companies. And then investors are actually out there speaking and writing checks at this moment. So we suspect that you're going to see that uptick in investment data reflected next quarter or the quarter after. So there's a little bit of a lag. But so even though we see a low in Q3, we suspect that the low really happened a quarter or two ago.
Expanding on that, recently we have seen major cryptocurrencies reach fresh highs for the year. So do you think the moves higher have been influencing venture capital funding in the space? Are investments still on the decline so far in Q4, or are there signs that things are turning around? Have you seen any of the data? I know you said you spoke with people, but have you actually seen any of the data that shows that things are in fact turning around? The last few times we spoke, you were optimistic that the trend will reverse by the end of the year. So are you starting to see this now?
Yeah, we in the data, not yet. But like I said, the conversations that we have with founders, investors, we do see that. And, you know, over the last probably 3 years or so, we've seen, and I think we spoke about this previously, that there's a correlation between the public token valuation and private market investments. And, you know, we've seen the public market cap of all the crypto tokens this year is up. And so we expect that, and there's a little bit of a lag as well in terms of the correlation. Typically, Bitcoin, ETH, and all these alternative tokens, they go up. And about 6 months later, you see investments also tick back up as well. We suspect that we're going to start seeing that also. So because public crypto tokens are up, we think that has helped investors become more optimistic in this space, and they're looking to invest more of their capital.
And when we spoke before, you noted that a lot of dry powder in the crypto space exists and that investors have raised billions of dollars in crypto investment funds over the last couple of years. A16Z has a multi-billion dollar fund that still has a good amount of capital left. And when we spoke this year, you noted that the capital will have to be invested over the next few years. And so I'm wondering, when do you think that will happen exactly? What will it take? And what would that do for the crypto industry as a whole?
Investors have raised tens of billions of dollars in these crypto focused funds to invest in this space. They're collecting management fees during this time. So what are they collecting these management fees if they're not investing? I mean, that is really their mandate, is to invest this capital. So they can't sit on this capital forever. They have to deploy that. And, you know, because if you look at, they about a year already of them not investing at the clip that they need to really deploy all of those funds, you're looking at roughly, 25 to 30 billion dollars of capital that needs to be deployed over the 2 to 3 year period of it was raised last year. So now you're looking at more. They have 1 to 3 years to invest this capital. So you're going to start seeing more investments increase in the coming years.
Now, following that multi-billion dollar settlement between Binance and US government officials last month, you argued that the development marked a pivotal moment for the crypto industry and highlights the need for crypto exchanges and other entities in the sector to prioritize regulatory compliance and adhere to established financial laws and standards. What else does the enforcement action signal to the crypto industry, and what is the impact on the space?
Yeah, the main thing it says is that you have to work with regulators. We've said this for the long time, and Coinbase, it's really they're the leader in the space. The way that they have entered in a jurisdiction, the way that they have engaged with regulators very early on, and the way that they only release products that they feel are law abiding, or selling to customers who they're allowed to sell to. A lot of crypto exchanges didn't do that, or not just crypto exchanges, and a lot of centralized players. So we saw all these crypto lenders, right, like BlockFi and Celsius, that offered products that were in this regulated gray area. Coinbase has not done that, and they've been the leader in this space. And we think that any new crypto product or project or entity that comes into the space who are offering services today, they just have to find a way to work with regulators. There's just really no way around that.
What areas of crypto or blockchain technology are attracting the most VC dollars right now?
Yeah, so we see a few. We still see a lot of centralized services like exchanges and wallets that are raising a lot of capital, and also gaming. And that really surprises. I think for one way or another, gaming has been one of the strongest areas of funding in 2023. Investors, their primary thesis that gaming is going to be the primary entry point for users into Web3. And so, because if that's the case, you're looking at billions of users moving into Web3 over the next few years, and their entry point is through gaming. That's where they're expecting to see most of the growth and most of the capital that's being generated in the Web3 space. So gaming, you've been seeing a lot of investments as well.
Now, according to PitchBook, Hong Kong and Singapore have been attracting more crypto VC funding because of their favorable regulatory regimes and licensing frameworks. The research firm noted that 11% of all VC investment in digital assets and blockchain technology went to firms based there, compared to just 2% of total deal value during crypto's 2021 bull run. So, what does that signal to you?
Yeah, it's really where the startups are going to be building. And even though we're still pretty bullish in the US market, we believe that a lot of the talent is still here. You're starting to see pockets of innovation pop up, and a lot of that it's around how favorable the regulations are. And Hong Kong and Singapore, you're starting to. We expect after MiCA becomes implemented next year, you're going to see it in Europe as well. So the longer US regulators and lawmakers delay writing specific rules for crypto and Web3, the more you're going to see talent and innovation move abroad. It's going to be a slow tick just because it's not very easy for a US founder just to get up and leave and go to another country and start building. But it's over a very long period of time, you're going to see the US lose to those areas because we have very strict regulations.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.